Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on CyclesMan.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
Tim, two things we wanted to talk about today. The markets say they're jittery. People are blaming Omicron, the latest variant of the COVID virus. But before that happened, the markets were acting very jittery, very toppy. Is that more the reason why there was a minor correction? Because of that, they just wanted to put a tag on it. Oh, it's Omicron. But really, it's just the natural state of the markets when they're overbought.
Well, that's how I see it, certainly, and we are at another important cyclical juncture, and yeah, we're starting to see some cracks. So
simple as that.
Pardon?
Simple as that.
Simple as that.
Yeah.
I mean, yes, and it's interesting, you know, that we also had Powell come out and say, I think it was Powell that said that right as we're trying to turn here, that the inflation is no longer transitory. You know, so it's interesting that, you know, it's all at the same spot. Let me say this. All of these factors are coming together, as you said, right as the market's sitting at a critical, in my eyes, a critical cyclical juncture. And I'm starting to see some cracks because of it. Yes. Now,
we have Jerome Powell, the head of the Fed, saying inflation is no longer transitory. Is he saying this is now a permanent state of affairs? Because they seem to like to talk in riddles at the Fed. They don't like to come out and say what they mean or mean what they say.
Well, as I see that, there again, he's trying to. I think he's trying to how do I say this? I think he's trying to sell the market on the inflation narrative. You know, before he was saying, oh, it's transitory. Well, now, like I said, right as the market, right as these cracks that I talked about are starting to appear, right as we're at this cyclical juncture, right as we see some of the commodities start to roll, he comes out and ups the ante, if you will. You know, instead of, well, we got inflation, but it's transitory. Now, well, it's no longer transitory. This is longer term. And so, again, like I said before, I think that's part of the narrative of trying to sell the reinflation, if you will. You know, I've said all along that I think that everything would go up together, and that it would peak together, and that all asset classes would go down together. And, you know, everyone has bought into, so far, this inflation narrative. And when I say inflation narrative, I mean the long-term inflation narrative, this hyperinflation thing. And this has been, in reality, it's been more fueled by the supply chain issues. But you know, the story we hear is that, I mean, some people are talking about that too, but there's this underlying money printing narrative that is also, perpetuating that inflationary, theme, if you will. And, you know, post-COVID, we have seen $7.6 trillion, yeah, I'm keeping score, in the debt expansion program, if you will. And it's been all under the guise of stimulus. And, you know, one may argue that's the popular narrative. I'm saying that is fueling this inflation theme is that, well, that's printing money. Well, I see it a little bit differently than that because it's actually debt expansion. So let me ask, you know, and then think about it simplistically to get your mind around that. if you're just insolvent. I mean, you have debt up to your eyeballs, but you can get one more credit card, and you go to the bank and you get a cash advance and you tap that card out, then you've printed money. You've printed money. No, you have expanded your debt. And then when that source is run dry, you do it again and again and again and again, and you say, well, I'm just printing money. No, you're adding to the debt. And that's what I'm saying when I say the debt expansion program. It has been sold as printing money. And I think that this massive debt expansion program has been used to fuel what was already the biggest bubble in history, even bigger. And that's what we have seen in this post-COVID world, this so-called reinflation. But what I'm trying to say is it's not a true reinflation of the economy. It's an expansion. It's happening on the back of the expansion of debt. And yes, we've seen higher commodity prices. Anybody who's been to the grocery store has seen that. But it's largely driven by that narrative and the supply chain. And so let's look at this from another perspective. The debt expansion program, it's been for what? And I'm kind of saying the same thing, but saying it from a different perspective. It's been for stimulus. Well, why have we needed the stimulus? Why do you need stimulus? Well, obviously you need stimulus to keep something going. So if you just think it through, the stimulus has been about fighting the deflation. And so that said, nothing really has been fixed. And I think, again, we sit here at another critical juncture with things, and I think what we're going to see is the inevitable collapse of all asset classes. But in the end, we're going to be left with this mountain of debt that can never be paid. And then on the one hand, I have one more thought. Let me spit this out while I'm thinking. On the one hand, you say, well, what difference does it make if the inflation is supply chain driven or if the inflation is money printing driven? All right. On the one hand, if it's real, then it suggests that this is a recovering of the economy. That it's I don't know how else to say it, but it's a legitimate recovering of the economy. On the other hand, it's the opposite. It's not related to a recovery. It's a facade. And I think that we're in the latter scenario.
A friend of the show, Wolf Richter, said they're trying to put the fire of inflation is burning. They're putting or planning to put less fuel on it, but they don't plan to take the fuel away at all. And I think it's because there's this confusion, and perhaps they want to continue the illusion that a healthy stock market means a healthy economy. And Tim, you've pointed out forever that's not really the case.
No, there's never been a more how do I say it, a more obvious disconnect. They're absolutely not the case.
Yes, so the stock market is not the economy, but governments seem to think it is, or they like you to think it is.
It's like you said, it's the illusion. They want you to think that it is. Exactly. The economy we pointed out back in 2019. I remember all the data, all the economic statistics we went through, and I talked about how the job growth rate and so on and so forth. And I don't remember all the data. The debt expansion. We looked at consumer debt. We looked at I think automobile production. We looked at all kinds of things, the underlying true indicators of economic growth. And some of those had been rolling over since like 2011, 12, 13, and even 15. And so we had plateaued coming out of the 2009 low. We had plateaued. We started plateauing in like 11, 12, 13 into that 15 period. And the economy was literally dying in 2018 and 19. And then along came COVID. And now we're struggling just to get back to those dying levels, those pre-COVID levels. You see what I'm saying? And it's all been done with this debt expansion program. And so that's what I mean with, on the one hand, is it real, or on the other hand, is it not? It's not. It's not, when I say real, it's not a real economic growth that we're seeing that has caused this, I still think it's transitory inflation.
Mm-hmm. Again, Wolf pointed out as well, getting all the stuff off the docks in L.A., what shipping companies were doing were using the docks as free storage space for their containers. Now the law's been passed. You got to run 24 hours a day and get those things off the docks as fast as possible. There goes their free storage space, and they're now having to buy or rent warehouses near ports. So a little subterfuge going on there. It wasn't a supply shortage. They just wanted free storage for their own stuff.
Yeah, and why was it? Why the change? Why of all these years things have rocked along like they have? Why all of a sudden was there this breakdown in the supply chain, so to speak? I don't understand the legitimacy of that. I'm not questioning that it's real and that it happened, but there's something not right about it. Is what I'm saying.
Mm-hmm. Now, for people wondering about supply chains and shortages, the greater Vancouver area, we've been hit by severe flooding that's wiped out all the farms that supplied the dairy and beef products for most of British Columbia. It cut all the rail links between the port of Vancouver and the rest of North America. So if your slippers from China or those fancy chopsticks from Japan are late arriving, they're stuck here in Vancouver. The rail lines were cut. I think both railways now have finally got some of their lines up, but they have to make tremendous detours. And we're still fighting this thing. By the way, Tim pointed out, America media is not covering this story at all. Even in Seattle, they haven't mentioned the fact that Seattle's a 2-hour drive away from Vancouver. They haven't mentioned the fact at all that a major part of British Columbia is underwater right now. Truly, the news stops at the border. They talk about the border towns in Washington State being hit by flooding, but nothing about what's going on in the greater Vancouver area. And it's not just Vancouver, it's other parts of British Columbia too. Giant freeway spans that have been washed away. Entire rivers have changed their courses. Our major pipeline from Alberta to BC that brings us our crude to be made into gasoline, it wasn't severed, but it was shut down out of precautionary measures. And so we're rationed for gasoline here to 7.5 U.S. gallons a fill, or 30 liters Canadian. So, again, Vancouver is your closest port to the Far East, and a lot of goods are stuck on container ships here because the railways can't move the goods right now. So supply chain issues we can see here are real. They're not made up, but we also know China is taking back shipping containers that are empty instead of carrying North American food and other goods back to China. And that's an artificial shortage.
Right. And I was totally unaware of the flooding and issues that you guys are dealing with. And, you told me about it 2 weeks ago, and I mentioned it to a couple of people that day and the following day, whatever, just to see if they had heard about it. And not that I was questioning it. That's not the point. As obviously it's happening. You sent me pictures, but I didn't mean for it to sound that way. But my point was I wanted to see if anybody else had heard about it. Nobody had. Nobody knew what was going on over there or up there.
Mm-hmm. We'll have more with Tim Cyclesman Wood right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, if inflation is going to stick around and the Fed admits it can't do much about it except raise interest rates, and they don't dare do that because of the giant debt that not only the government has, but a lot of people are also carrying, what happens to the markets when we're in inflation like this and they don't have any plans to stop fueling it?
Well, I think what's going to happen is that the debt expansion is going to, it's the last ditch effort, like I said, to hold things together. How long it can go on, I mean, who knows? Who would have thought that it'd go on as long as it has? But I think that it's going to end with massive deflation. I think they're going to lose this, and in the end, I'm sticking to, just like I've said all along, all asset classes are going to, literally collapse together, I think, is going to be the end result, with the mountain of debt left.
And because of that debt, does the stock market still have a major correction or a collapse at some point?
I think so, yes. It'll be, I think, just like we saw in 2008 and into 9, and just like we saw in 2020, it all goes together. When it goes, it all goes together. And like I said, we're back at a point where we're at an important cyclical juncture here, and I'm seeing some cracks. So how it develops, structurally, that remains to be seen. I'm following it in the, that's what I'm looking at and following in the research letters and in short-term updates.
Now, if we do have a major market correction or a collapse, will commodities still remain hot?
Nope, not at all. Not at all. I think the commodities, I think that the gig will be up. Like I said, all asset classes, I think it all goes down together.
Are there any safe havens? Is gold going to tumble, but perhaps be a good buying opportunity if it does?
Absolutely. I think gold is going to get hit with it all. I don't mean to not sound like a gold bug. I actually feel like I am in that category, but not yet. I think that the buying opportunity for gold will come with the next 9-year cycle low as I see it, after this giant washout occurs. Unless they keep the damn game going, longer than anticipated. But I really think that, when it all goes, like I said, everything goes together, and then it's that next 9-year low. And I think that's where we see the real inflation and the buying opportunity for gold. Not here, not now, not on the back of this bubble. Not on the back of this debt-driven expansion of the ongoing biggest bubble in history. No, not here, not yet.
Crude prices have remained unusually high going into the Christmas season. However, OPEC says it's going to increase production. President Biden apparently asked the Chinese to up their oil production, and I didn't even know that China was the 7th largest oil producer in the world. However, they consume all of their own oil, and they reserve most of it for their military, so their citizens don't get to enjoy their oil wealth either. So oil prices, do you think, are they going to take a major dump?
Though they have been. They have,
yes.
They have been. I had structure in oil. I don't have a current quote in front of me at the moment. I think oil is down some more today, but let me see if I can grab a chart real quick. No, this is not up to date, but yeah, oil is down almost 4% this week. I had some intermediate term sell signals and some structure starting to take place about a month ago in oil in early November. And it's been it bit, and it's I think it's a sign of the cracks. It's one of the cracks.
So what's our scenario? Do you have any, I know timelines when it comes to the stock market are always hard to place, but is it going to be more or less happy times into the new year, but look out, say, second quarter?
Well, no, I don't want to, I can't say that because it depends on when the structure bites. That's the thing. When it bites, and every little setup is different. Like I said, I see some cracks now. There were some cracks back in the summer. They didn't bite. In 2020, we saw the cracks. They in late January, early February, and it bit, and bada bing, bada boom, it happened quick. In 2020, it took a while. In 2007, it happened quick. So each scenario is different, and I can't say, I can just say I see cracks, and the question is, how do those cracks develop from here? What kind of structure do we see associated with it? And again, that's what I'm following. That's, as they say, I hate the phrase, but I'm going to use it, a fluid situation. And that's what I'm saying, that, we have to monitor and understand what that structure is telling us. And that's what I'm following in the research letters and short-term updates.
Have you been following cryptocurrencies at all?
Yeah, and as of, I'm not looking at a quote. I say following. I follow it casually and look at it on occasion. But as of the last, I don't know if you remember, but I think it was the last update or interview we did, or maybe the one before that, I made the comment. I said that I had an intermediate term sell signal on Bitcoin. I think you asked about it then, and it's been off some accordingly. I think Bitcoin is among those asset classes that are trying to peak.
Mm-hmm. Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.